Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, October the 16th. The year's 2019. Let's talk trading. Apply the basics, fundamentals. You know, this week I talked about finding your own way and minding your own business, or minding your business. And you see, you have to go back and apply the basics, the fundamentals. And I know they're not that cool. I mean, there's no fancy formulas. There's no squiggly lines or geometric patterns on the chart, no funny names, none of that stuff. It's just basics, the fundamentals of trading. And what are the basics? Well, if you think about it, when the market opens, there's an open price. And then price moves away from the open price. And then maybe it makes a new high or a new low. And then it heads back towards the open price. And maybe it makes another new low or new high. But that's it. That's the basics. That's the fundamentals. Price is going to move. And then if you look at it to the previous session, price is either going to break out of the previous session's high or low, or both, or it's going to stay within the previous session's high or low. These are just basic things. Basic. Now, that being said, there's things to take into account like the spread, okay? And there's things to take into account such as your position size and your risk. And I know you know what's coming next. We're always talking about the risk and money management part, because this is part of the fundamentals, risk and money management. Doesn't matter if you use somebody else's indicator and it puts a arrow to buy or arrow to sell. Okay, fine, take the trade, but keep in mind your risk. In fact, the traders contacting me, I guess they want to use the buy zone on some instruments that aren't Forex, and they're having trouble. But I asked them if they ran the frequency distributions, and they said, well, no, because they have MT5. It's like you're not going to be able to know where you should enter those trades unless you run the frequency distributions. You have to know the high minus the open frequency distribution and the open minus low. Otherwise, you don't know when to enter the buy zone. It's just that simple, But and that's one of the basics. That's the fundamental part of the buy zone. Just like in risk and money management, it's just so basic that the amount or percent that you're willing to lose per trade, you make sure you don't lose more than that, because any given trade, you don't know if it's going to be a winner or a loser. You don't know. And you don't want that loser to become the biggest loser and take you out of the trading game. And of course, these videos are for educational purposes only, and your results may differ from mine. That being said, keep in mind that trading and Forex trading, any kind of trading, is risky and you can lose all your money. That way, if you need financial advice, seek it from an accredited financial professional. That way, when they lose your money, you know it was lost by someone who was an accredited financial professional, rather than somebody you listen to off a YouTube video or somewhere on the internet, some trading forum. Okay, we're talking fundamentals. Once again, we're looking at a candle chart here, but we could switch over to a bar chart. It doesn't matter. What matters is there's certain things here from the previous candle. We have the open, we have the close, we have the high, and we have the low. And price is going to do what? It's either going to make a new high, new low, or it's going to test that high, reverse, or test that low and reverse. That's all price can do. So you can see here with the dollar yen, it failed to make a new high, so it came back in. Really simple. So if you were trading a buy zone, you would have most likely triggered short. and picked up some profit. And we can look at other pairs. We can look at the euro yen here. It opened, it went down, most likely hit the pivot, turned around, and made a new high. Right now we're 20 pips. Fundamental. Let's look at dollar Canadian. What happened here? We opened, we went up to the previous candle's open, reversed off of that open, and then went through the bottom here. Now you might go, how do you know it did that? Well, I mean, it's kind of obvious. You can see here, what it did. Here's the previous day. Actually, if I'm going to do that, I should probably shade the previous day. We're going to change true previous day shade. Let's just make that a light, something light here on the screen. So you can see here, it went, opened, went up, and then came down. Just like I said, it's just kind of obvious. Okay, but you can see here, I like to look at the daily. Now here's one where it went up, made a new high, reversed, made a new low, and reversed. I mean, you can go down to the hour if you like, and then you can see it right there. So it's fundamentals. This is what price is going to do. So make sure you understand this and just keep it in mind as you're trading. What is price doing? It's moving away from the open. Is it testing the previous low? Is it reversing off the previous low? Is it breaking through the previous low? And you can see here, it tested it, it broke through, and then came back above. Fundamentals, everything just around this line, just around this line. Fundamentals. Okay, so let's move on. For the week, we still have one gap that hasn't filled. And you can see that the dollar yen once again broke through the previous week's high. So see, if you go back here, you can do this for the week or the day or the month. But it's the fundamentals that you're doing it. In fact, you can do it for the hour. And we're 97 pips below, 96 pips now below the open here on dollar yen, the yearly open. And you can see here what happened. It got inside the opening range for the first day of the year, and then it exited out. Once again, just trading these ranges, the highs and lows, trading at the line. Fundamental stuff. Here, the opens for the monthly opens. You can see here what price did. And then once again, the first day ranges. You can see where price is in relation to them. Inside bar trade, it exited yesterday and it's still above. But notice we have some more inside bar trades available to us. The range, look at these ranges, 1, 2, 3, 4, 5, 6, 7, 8, 9 over 100, but we've got 1, 2, 3, 4, 5, 6, 7 over 200, and 2 over 300. That's some movement on those pairs, most of them being the pound pairs. Holo, you can see how price moved off the daily H1 highest open and the monthly D1 highest open right there, right here. Once again, fundamentals, open, high, low, close. Okay, nice trade here. Here's the pivot point. Here's the daily open. So this was a clear indication too short. You had your trigger, it hit the pivot, Once again, fundamental trade, nothing esoteric, very simple. Something you can do at home, boys and girls. You don't have to leave it up to the professionals, right? You can do this at home. And not enough range for the rat. Here's the pivot. We still haven't hit the weekly pivot here. Waiting for a tick. There we go. And you can see here we took out that pivot. It's pivots. In fact, I had an idea. I can take this code and I can make it, we can have a lot of missed things. We could have missed pivots, missed midpoints. So look for that sometime in the future. Price action, you see here, price really doesn't like staying between the two lines. It came down here, it stayed in there for 3 hours and finally got tired, had to leave. Came back through, had to leave. Price just doesn't like staying within these two lines because they're only 10 pips apart. Price ranges in and out of the wick zone. We've seen this repeatedly. And see, that's part of fundamentals. That's part of applying the basics. Is that you're going to do it over and over and over and over and over again because those are the fundamentals. Those are the basics. Your risk, your money management. It's going to be over and over and over again. You know, trading at these lines over and over and over again. You're going to win some, you're going to lose some. That's trading. And that's why you have to apply your stop loss. You can see here we've had about 4 or 5 pip movement here. Nothing to write home about at this time. You can see the Einstein line right here. We're just haven't moved since I opened the profile. And you can see where the wick zones are here. But I'd like to show you this again. This right here is the opening range for the first day right here. You see yesterday price left it. But what we're really looking for is we had the daily open. See, price hasn't hit that ATR yet. And price hasn't hit this one. So so far for the 3 days that we've been trading, you can see we really haven't had that much range, only 86 pips, and today's only 31. So, fellow traders, the basics, the fundamentals, you have to apply them. Apply them every day. You don't have to seek, the fancy. It's kind of like in karate, somebody wants to learn all these fancy kicks. No, you just learn a couple of kicks, a couple of punches, and then you can get your black belt. That's all you need. All those spinning, flying kicks, that's for the movies. You don't really need those. And that's the same thing with trading. I look at some of these guys, what they're doing out there, and some of these girls, some of these whatevers, and I just don't know. But they know how to market that stuff. They know how to get people to take a nibble, take a bite. They know how to separate people from their hard-earned money. But you don't really need any of that stuff. And the funny thing is it's the same people, and they're just constantly coming out with the same old stuff. Repackaged. Some shiny indicator with something that you can look at on the chart. Ooh, look at this arrow. If you took the trade here, you would have made lots of money. Or, here's the 4 best trading days of the year. You would have made, 11,000% on your money. You just got to wonder, what next, right? I mean, it's just kind of funny to me how they can do it. But, stick with the fundamentals and you won't be fooled. You can just look at something and go, does that make sense? Does that look like a fundamental? If not, just ignore it. And just focus once again on your trade, on your portfolio, and what you're doing. Because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And once again, if you're new, come down here and hit subscribe.